Welcome to ShortView Trading. It's your morning market hit for Monday, 1st of June. What matters today and this week for traders? So markets remained pretty resilient on Friday. Initially, they sold off at the start of Trump's speech on China about concerns in the deterioration of that relationship, but they then rallied sharply into the close. Despite that, though, they are still range bound. If you look at the Nasdaq, it's really gone sideways since Tuesday last week. In the S&P 500's case, it's a little more tentative, but it remains below its highs from Thursday last week. So the key question is, are markets rolling over, or are they just range bound and consolidating, digesting gains before their next leg up? In that respect, it's interesting to look at our short-term models, which are still on or near to their collective sell signal. There's a lack of downside put protection in portfolios, and therefore the short-term put to call model remains on sell. Equally, our risk appetite model shows the market's still pretty greedy, with that indicator having just been on sell and just below those levels at the moment. Over and above that, lots of cyclical assets around the world are pretty toppy in the short term. If you look at the Nikkei on a short-term technical indicator, it's overbought. You could make the same comment about Korea and a bunch of other cyclical equity indices in Asia. Equally, if you look within the US, you can see a lot of the cyclical assets are trading at the top end of recent uptrend channels. The Dow Jones Transports, for example, as you can see in the chart in front of you now, is the top end of that channel. The Russell 2000 is similar, and the Nasdaq banks seem to be struggling, having failed to meaningfully break above those key levels of the last few weeks. So it's clear that cyclical assets are pretty overbought and unlikely, one would have thought, to lead the market higher, and therefore vulnerable at this juncture. That leaves tech and defensives as the only areas of potential leadership. For full details on how we're playing this market, please see today's daily rag, available to subscribers and to purchase on the website. So what are we watching today and this week? Well, today I think it's all eyes on ISM manufacturing out of the States. That'll be key, as well as the PMIs we're getting across the Eurozone and other parts of the Americas. In many cases, though, they are final estimates, with the flash estimate already having come out. Elsewhere, Italian car sales will be interesting for the month of May. See how much damage there is there. In terms of this week, lots to focus on. Payrolls on Friday out of the States. A very big loss of employment expected once again after the big 20.5 million in April. The market consensus is around 8 million jobs lost. Equally, we got ISM services and we got the ECB on Thursday. And then German unemployment data should also be quite interesting later this week. So that's it from us. That's your morning market hit for Monday, 1st of June. Thank you for listening. Please do subscribe on YouTube, LinkedIn, Twitter and or Facebook. Simply search under ShortView Trading. Thank you for listening. Stay safe. Trade well.